So on Wednesday, July 5th, Meta Platform launched a Twitter rival app called Threads that directly competes with Twitter. And already in the first 7 hours, CEO Mark Zuckerberg said that the app already attracted 10 million people signing up to Meta's new app Threads. So, what does that mean for Meta Platforms investors? Does this new app make the stock a screaming buy? Well, I had already recommended Meta Platforms stock as a buy to start 2023, and the stock is up 142% on the year. 142% already on the year. However, even after this huge stock price increase, the stock is not prohibitively expensive. In fact, the stock started the year very, very cheap, in my opinion, and that was my argument for why investors should buy Meta Platform stock. And I was saying this around January, around December of 2022 and January of 2023. I was repeatedly saying, hey, the stock is cheap. Investors should jump in on this. Now, with this new app, I would say incrementally it boosts the company's prospects. What I have here is highlighted is Meta Platform's latest update of its family of daily active people. It had 3 billion average daily people that were using its app across, Facebook, Instagram, WhatsApp, and Messenger. And that was up 5% year over year. In other words, it added 150 million nearly users in just 1 year. So Meta Platforms absolutely dominates the social media space. Absolutely dominates the social media space. And that's led to phenomenal growth in revenue, phenomenal growth in profits. In the last 2 years, however, Meta Platforms was set back a little bit by privacy policy changes made by Apple, which made it harder for Meta Platforms to sell targeted advertising. And so while it's trying to find a workaround that, investors punished Meta Platforms stock and it started trading extremely cheaply. And what I had been saying is, you know what, just give Meta Platforms time. It'll find a workaround, it'll find a way to collect more data from users. It's got experience doing that. While they haven't found a way to do that just yet very effectively, what they have found is a strong competitor to two of their main rivals, one of which was TikTok, and they launched their own short form video called Reels that's growing exponentially quickly. That's taking market share away from TikTok because that's the primary area of growth in social media is short form video. And now with the launch of Threads, they're taking aim at Twitter and likely to take some market share away from Twitter. And so you've got a developing story that continues to support Meta Platforms and Meta Platforms as an investment. Now, what remains to be seen is how effective their billions of dollars of investment in the metaverse turns out. That's the big question mark. They've already spent more than $10 billion on the metaverse, and we have not yet seen meaningful results on that investment. So that even I'll give it to the CEO Mark Zuckerberg told investors that this would take a long time before we saw meaningful results. So he did warn investors about that. But still there is that big question mark hanging over the stock that's otherwise performing excellently is what's going to happen with that metaverse. And I will say that it's likely to be fruitful. There have been some estimates that suggest the metaverse will be worth around 5 trillion in revenue in the year 2030, and Meta Platforms is one of the first players to make meaningful investments in that category. So if it does turn out to be a huge industry, then Meta Platforms is in a great position to capitalize on that. And then like I showed you earlier, they've got 3 billion daily active users. So it's not going to be as they demonstrated with the Twitter competitor. They got 10 million signups within 7 hours. So it's not going to be that difficult for meta platforms to hit the ground running when that market comes to fruition. So for all those reasons, I still like meta platform stock, even though it's not as cheap, of course, as it was when it started the year. But still, everything seems to um, be heading in its direction after a very difficult 2021 and 2022. Those 2 years were very difficult for meta platforms where things were going in the opposite direction, where TikTok was attacking its market share. Apple made it harder for it to sell targeted advertising. Marketing overall spending was coming down. So now those are reversing to the most part, and its prospects are improving. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.